Inflation, a little bit less of a headache for authorities at the moment, but can we see a rate cut?
Yeah, no, I think it's too early to start predicting a rate cut, but I'm very happy that inflation came in as low as it was today, 5.3%. We haven't seen it this low in a long time, and if you remember that the Reserve Bank wants to keep inflation below 6%, I mean 5.3 is a great outcome, definitely. But I think in as far as getting rate cuts, I mean that story would have been the case if the rand hadn't come down, in the past few months. I think we'll probably be starting to talk about a rate cut in the last quarter of the year, maybe. But at this stage, I think that's we're going to have to wait and see. There's a lot of moving parts.
The rand below 13 rand, though, strengthening to a one-month high today. So can we maybe have a little insy-wincy cut in July?
Nah, highly doubt. I think there's still so many moving parts, Francis. There's so many moving parts. There's a lot of things that have to happen. There's a policy conference happening in June, and then there's the elective conference happening at the end of the year in December. So depending on the outcomes of those things, I think that, we'll have to see where the currency goes. If the currency does stabilize nicely and stays below 13 for a protracted period, or resumes this momentum to pre-Gordon firing days, I think that we could see, more room for the Reserve Bank to cut interest rates in the last quarter only, and maybe even in the first quarter of next year.
The rand, surprisingly, to some, has been weathering the storm of the downgrades, although more could be coming, isn't it?
Yeah, I think it's priced in. If you're an investor in the markets these days, if you don't think that Moody's is going to downgrade us, I think you've got a problem. So let's see. I think even if Moody's, though, downgrades us, we're still above junk status by a notch or two. So I do think we'll survive, Francis. But yeah, we don't want to get downgraded any further from here now, do we? And
it would be very unusual for them to downgrade us 2 times in one go, which would put us in junk. I heard one outlier saying that's a possibility.
I think definitely. I don't think so. I don't think they'll take us all the way down to junk. I think you can see that some of the political issues that were concerning in the beginning of the year, for example, when we had lots of these downgrades come through, some of them have started to sort of dissipate, or kind of the market is warming up to them. Minister Kigaba has been doing his rounds, and I think he's starting to get accepted, but he has a lot of work still left to do. But I do believe that the market is taking things in its strides, and you're seeing it in the rand. And I think if we continue to behave ourselves, if we don't do anything unwise in the next few months, we may see the rand go all the way to 12.50, in my view. And as I said, the outcomes of the ANC conversations that will happen in June and in December will also determine where the currency goes and where investor confidence ultimately stays.
I saw some analysis that suggests that maybe we're lucky because investors, when global growth is seemingly kicking into gear, they will still invest in junk bonds in junk countries. Could that be the case?
No, look, I mean,
they're kind of ignoring the rate.
There's a certain cluster of investors that will do that, but it's not a holistically, it's not a wholly accepted principle. If you don't have a mandate to invest in junk status countries, you're not allowed to do that. But we need to think about it once again, about the fact that it's only some of these ratings agencies that have downgraded our foreign currency denominated our bonds. So the 90% of the bonds we have in the country are still relatively okay to invest in. And as long as the country can continue to service its interest payments on the outstanding debt, I think people won't panic. You're seeing that in the interest rates, or rather in the 10-year notes interest rates. That's the R186, which is at an interest rate of 8.76, 8.8 odd %, which hasn't collapsed aggressively. Which says people are still buying South African bonds. Even foreigners, in fact, are still buying South African bonds. But there has been some pullback, definitely. Capital markets are starting to think twice before they jump into South Africa. But what's important as well, Francis, is that we continue to see buying in emerging markets, that's taking the rand higher along the rest of the other emerging markets as well.
So what's the state of our economy now? Because looking at this inflation figure again today, for a while we were very worried about stagflation, a stagnant economy and inflation going up. Now inflation moderating, but we still don't have economic growth.
Yeah, look, I mean, you may have seen a few days back IMF giving us 20 basis points more from their previous estimate in terms of growth, taking us from 0.8% to 1%. you've seen the numbers from manufacturing. They were looking better. Production numbers are looking better. Mining numbers look better as well. And talking about why the food prices have come down, I mean, it's because of the great rain we had. It was end of last year and beginning of this year. That's made sure that at least some of the inflation pressure on food does come off a bit, and also the decrease in the price of fuel as well last month was very useful in my view to bring the inflation number down. Let's hope that we continue to see an environment that's accommodative of food pricing, and also making sure that the currency can stay strong, because we're seeing the price of oil start to tick up, Francis. And it never happens that we have the rand firming up and the price of oil is below 50. So I just hope that
prices could come down, but petrol prices could go up.
Could come up.
And it all depends on the rand.
And where we could be cautioned is if we manage to keep the rand strong. So that's why I said earlier, please, no more bad decisions. Please.
Okay. Strong rand.
Yeah.
The US Fed is expected to hike interest rates. You're saying we're not going to move, but what does that mean for us?
Now, look, I think it's still debatable whether or not they'll tick up interest rates, in my view. They have opened up the gap quite significantly. But now with the currency having fallen, the dollar has fallen from about 105 to 111. I think they now have room probably to say, okay, look, maybe we can manage to push interest rates. They could consider doing that, but the impact that would have as well is to see more capital going to America, and then it will strengthen the US dollar once again. So the weakening currency is giving them room. But should they increase interest rates in America, what you'll see is that emerging markets currencies are going to weaken. And you could see a little bit of flight out of our emerging market bonds and equities as well. But I believe on a balance of scales, emerging markets remain very attractive. So South Africa will still probably receive some investments.
It seems like that fear has dissipated, that there'll be a huge flight of capital.
Look, there's worse off markets than South Africa, to be honest with you. And if you think about it, since the recent parliamentary reshuffle or cabinet reshuffle, our markets did not fall, Francis. Our markets are even better than where they were about 3-4 odd months ago. So there is still room for markets to sustain an upward trajectory. Can you just imagine if we could just get the rest of the house in order? If we could start to, if we see Minister Kigaba going ahead and saying, look, SOEs, we are seriously considering equity partners coming through, like we've had that SAA may get an equity partner. I just want them to drive more towards saying, you know what, we've got too many of these SOEs, they're costing us too much money, Petro SA, SAA, etc. Let us probably start thinking about privatizing these things. Yeah. Let's start thinking about privatizing these things, and maybe one very badly managed SOE as well could need to be privatized as well. I think it will save us a lot of money.
All right, before you go, and let's not go down that rabbit hole. Something else happened today globally. A credit rating downgrade for China, the first in nearly 3 decades. Yeah. And they're of course a huge market for us. So what does that mean?
Once again, I mean, there you've got issues of people being overly indebted in some sections of China. But China is actually a very big saving nation, because for every 100 rands people in China earn, they put away about 40 to 50 rands of that money by way of saving. So the economy is more strong. I think it was just a structural adjustment in terms of the ratings. And just think about the fact that China is still growing at about 6.4% per annum GDP. Compared to our 1%. So there is still room, I think, for Chinese markets to continue to be attractive to those people wanting to invest in emerging markets.
All right. Always great to chat to you. Thank you so much. Owen Nkomo from Inkunzi.